Hello and welcome to Morningstar. I'm Emma. We're joined today by Grant Kennaway. He's a global director in our manager research team and also looks after our sustainability research locally. Grant, thank you so much for joining us today.
Thanks for having me.
Grant, I think anyone that looks at this space knows that we've seen an enormous amount of new flows go into ESG funds, an enormous amount of new funds in this space. What's really driving this trend in ESG investing?
Yeah, there certainly has been a lot of flows, Emma. And if we look at our sustainable landscape report, we saw flows grow by about 30% over the year to 30 September 2019 to be about $22 billion invested in these strategies in Australia. So I think there's like three key factors that are driving attention and flows into sustainable funds. I mean, firstly, there's a simply more retail client interest in investing in a sustainable manner. If you think back to last summer's bushfires, many Australians came to appreciate the risks that come from climate change. They began to question their personal exposure or support for companies that are involved with fossil fuels. And we hear specifically about from investors who want to avoid exposure to fossil fuels and particularly dirty fuels like thermal coal. So this has really encouraged investors to seek out sustainable funds that may have exclusions to the fossil fuel sector. And I think that's a key driver of growth. The second factor is just that availability of product. You mentioned we're seeing more products come to market, and we saw 10 new sustainable products be available for investors in Australia over the last 12 months. Half of these are ETF strategies, which investors are increasingly comfortable using. So again, I think that's supporting flows. And finally, markets have rebounded since our March lows. So there's just generally more confidence in share markets, and sustainable strategies have benefited from inflows along with other strategies.
Yeah, I think a lot of people have seen that the sustainable funds have not only increased in flows, but they've actually performed quite well during the year. Is there a particular reason why these funds are outperforming, regular funds that don't have this ESG or sustainability overlay?
Yeah, you're right. You're right. The sustainable funds have had a really good 9 months for 2020. And if you think intuitively, a lot of these products have exclusions, and exclusions from the oil and gas sector in particular. During the first wave of COVID, we saw the global oil price smashed. We saw stocks in that sector really hit hard. And so because of those exclusions, a lot of these sustainable funds have really outperformed the global market benchmarks and their peer group. So we're seeing just over 60% of sustainable funds outperforming their peers, which is a good result, but it is intuitively explained over the short term due to these exclusions. There's not enough long-term data yet, but you could safely say that investing sustainably, you're not giving up performance in this type of environment. So it's been good for sustainable investors.
Do you expect the amount of ESG funds to keep growing next year? Do you think it's a growing trend for the Australian market?
I certainly do. I mean, globally, we can look to see what's happening in Europe, where they're ahead of the curve in terms of ESG fund development. We can learn from them that there's been significant growth in number of products and number of flows. We know more Australian asset managers are increasingly taking this space seriously. They're hearing the bottom-up demand from investors. They're looking at their product lineups, and I know there's a number of new strategies coming to market. Some of these will continue to be more exclusionary based, but we've got managers like Pendal who are going to be bringing out more of an impact product range. So it's not just about exclusions. We're looking to see more strategies come to market that are going to be more skewed to sort of positive investment to sort of match expectations of investors.
Yeah, when I look at the sustainable space or the ESG space, I see a lot of funds that are working at exclusionary type screens, screening out tobacco, screening out fossil fuels, etc. Why has this sort of fund been the most popular sort of fund? And do you expect a broader amount of funds to be launched in the next coming years?
Yeah, I think the exclusionary funds are a comfortable starting point for investors, and it sort of matches their personal values. So I gave the fossil fuel example that a lot of people who may be younger, investing for the first time through superannuation, they want to avoid fossil fuels to, help their belief that climate change is a real issue. But we also see older investors, worried about their grandchildren. They've have a large amount of capital, and they also have this environmental bent where they're looking for the more exclusionary investments. And tobacco has been a classic. I mean, there's been a well-run campaign in Australia to really avoid any exposure to tobacco. So these exclusions have certainly been in play for a number of years, but have really come to the fore over the last 12 months, given these concerns about climate change. But looking ahead, I think people they're very comfortable with the exclusions, and I think more investors are looking to make an impact. To basically skew their investments to sectors they believe in, maybe renewable energy, it might be modern transport, healthcare. So I think we'll see more of these impact funds come to market, which really that next level of sustainable investing. It's exclusions that have been about the last decade, and I think impact will be about the next decade.
When I look out at the sustainable fund landscape and I select a fund, how can I go about as an investor really understanding what's inside that fund, what they're investing in, how they're investing, are they engaging with companies on ESG? How do I work out those sort of things so I can make sure that I as an investor are aligned with where my fund is?
Yeah, look, that's a great question. It is a complicated sector, and investors do need to be prepared to do a bit of reading. All asset managers who operate in this space are very transparent. You'll see a lot of information on their websites. They'll list out the exclusions their fund may have. They're very good at describing the investment mandate, and will make available their major stock holdings. So I think it's important for investors to be engaged, and you do need to look at the label of what is actually in the tin, and also avail yourself of the fund manager's information that's made available via their websites. And then there's groups like Morningstar. We have introduced our low carbon ratings to allow people to understand about what the carbon footprint of a fund they may be investing in looks like. We have our ESG Globe ratings that look at the ESG risk within portfolios. So we're trying to make tools available for retail investors so they can get a better understanding of the sustainability profile of their investments. And there's other groups like RIA, which is the Responsible Investing Association of Australia. Again, they have some good information on their website. So I think there's plenty of tools for investors who want to invest in this space to inform themselves and be interested in how their capital has been allocated.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.